This is one of the most famous software disasters ever. Knight Capital was among the biggest trading firms in the US and a major player on Wall Street. They handled billions of dollars every day. They used computers to make lots of tiny decisions about who should buy or sell which stocks and where. Kind of like a super fast robot that helps match people who want to buy with people who want to sell. Their software, especially a program called SMARS, took big trade requests and broke them into many smaller orders, then sent those orders out to stock markets so the trades could happen quickly. It acted like a traffic controller for many stock orders each day. Knight was rolling out a software upgrade to participate in a New York Stock Exchange initiative called the Retail Liquidity Program, RLP, a way to help match small investor orders and improve liquidity. Knight's trading system consisted of 8 servers that run a program called SMARS, their automated equity router. 7 servers got the new RLP code just fine. 1 server did not. It kept an old, dormant piece of code that should have been removed years earlier. This old code was from a deprecated function, originally known as PowerPeg, that was never supposed to be active in live markets anymore. That old code had a logic bug. It would keep sending orders endlessly because it could never recognize when an order was completed. That means a normal order became millions of duplicate orders. Why did one server not get the code? Engineers deployed the new software by manually installing it on each machine. 7 servers were updated correctly. 1 server was not. The moment the stock market opened that day, that one broken server started sending insane buy and sell orders on hundreds of stocks, over and over and over again. In 45 minutes, Knight Capital lost $440 million. That's more money than the company made in an entire year. The losses were happening every second. By the time humans realized, the software had already destroyed the firm. They couldn't stop it fast enough. The company was basically dead. They had to be rescued and sold. A single software deployment mistake ended them. Not hackers, not criminals, not competitors. Their own software. So let's try to create this exact same software with Artis and understand what exactly went wrong with Knight Capital's planning. Knight Capital used an algorithmic trading software that automatically buys and sells stocks based on the prices. So let's start by giving Artis a prompt for that. The feature they added in their new code was managing small size limit orders by joining the best bids and adjusting or canceling those orders as prices move. So we add that into the prompt as well. When we look at the live market data generated by Artis, we consistently see the contradictory problem of automation in modern trading systems. For example, none of the trading systems automatically shut down during failure executions, which ends up in millions of losses, as the Knight Capital example reminds us. We are seeing a rapidly emerging trend toward AI-driven systems that help competitors stand out in the market. However, among traders, there is still hesitation to fully trust in AI strategies, their main pain point being exposure to volatile amplification of their losses during algorithmic software failures or market stress events. Yet, we see that this makes automation even more crucial to conduct real-time risk management for avoiding slip-ups and losses. These demand triggers make it clear that most of the pain points of traders exist today because of lack of real-time adjustments, advanced risk management, and transparent automation algorithms that clients can trust. So for this video, let's start by focusing on those 3 pain points: real-time risk management, market anomaly detection, and transparent automation behaviors. Let's start by selecting important features like real-time loss monitoring, automated risk mitigation, such as order throttling or cancellation when it detects risky or rapid loss trends, immediate enforcement of risk limits, past which the system automatically shuts down to prevent losses, and permission of manual overrides by administrators in times of emergency. This means that if this module was implemented by Knight Capital, their software failure would have stopped within 3 seconds of its execution, because the AI would detect the rapid loss almost instantly and alert the authorities while it shut down. The visual dashboards also give us an idea of what the real-time market assessment looks like. The live order monitoring dashboards shows us current orders in real time and the route timelines that get implemented within seconds. We also see safe shutdown dashboards in case of emergency and detailed checklists of things that need to be validated before the trading can begin again. The Anomaly Center shows us the live and rapid monitoring of the trends that we potentially deemed as anomalies, requiring rapid auto-responses, such as safe shutdown, cancel or stop orders, or throttling requests. The lesson is simple. If you're building an AI product, it doesn't mean it will break the market instantly. The competition is huge, and the buyers are concerned. To build a product that survives the future, your AI needs to be transparent, trustworthy, and failure-ready, not just helpful. So stop focusing on speed and start building with clarity.